GoPro's stock is trading for 76 cents. In 2014, one share cost $93. The company just told its own investors in writing that there is substantial doubt it can survive the next 12 months. And the man who founded it just handed over $20 million of his own money to keep the lights on. This isn't a company in trouble. This is a company on life support. So how did the brand that basically invented the action camera end up here? Let's go back to where it all started. GoPro IPO'd in June 2014 at $24 a share. 4 months later, the stock hit $93.85. That single day pushed GoPro's market value past $11 billion. Nick Woodman, the founder, was briefly the highest-paid CEO in America, sitting on a stock package worth close to $285 million. GoPro wasn't just a camera company at that point. It was a lifestyle brand, a media company, a symbol of the extreme sports YouTube era. Investors weren't just buying cameras, they were buying a story, a hardware company, whose customers made the marketing for free, one skydive and surf video at a time. And then right at the top, Woodman made the decision that would quietly wreck everything. Instead of doubling down on the one thing GoPro was actually good at, he went shopping. GoPro launched a media division to produce and license footage. It bought a French virtual reality company, and in 2016 it revealed its big bet on the future, a drone called Karma. Woodman's own compensation that year told you everything about where the company's head was. His bonus alone was more than double GoPro's total annual profit. Karma launched in October 2016. 3 weeks later, it was pulled off shelves entirely. Roughly 2,500 units were recalled after some of them simply lost power mid-flight and fell out of the sky. It came back in early 2017, but by January 2018, GoPro killed the Karma line for good after burning through an estimated $376 million on it. The media division quietly folded the same way. Between the drone disaster and the content flop, GoPro spent hundreds of millions chasing businesses it never understood, while its actual product, the camera, started losing ground to something much simpler, the phone in everyone's pocket. By 2018, Woodman had cut his own salary to a single dollar. The company slashed its workforce by more than 20%. It felt, at the time, like rock bottom. It wasn't. It was just the first of several bottoms, because 2 years later, GoPro actually found something that worked. In April 2020, hit hard by the pandemic, the company cut another $100 million in operating expenses and pivoted hard into direct-to-consumer sales and a paid subscription service. GoPro Plus, cloud backup, camera discounts, unlimited replacements. It worked better than almost anyone expected. Subscribers jumped 145% that year, blowing past GoPro's own target of 600,000 to 170,000 and landing at 761,000. Direct sales through GoPro.com doubled to $283 million. For a brief moment, it looked like Woodman had actually found the sustainable business model that hardware alone never gave him. Recurring revenue, higher margins, and a direct relationship with customers instead of relying on retailers taking a cut. By 2021, subscribers passed 1 million and revenue hit $1.16 billion, the best year the company had seen in a long time. But even that wasn't enough to outrun the two things closing in from either side. First, smartphones got good enough and cheap enough that most people stopped needing a separate rugged camera at all. Second, Chinese competitors, mainly DJI and Insta360, caught up on hardware and then undercut GoPro on price, eating into exactly the segment GoPro used to own outright. GoPro still makes what many reviewers call genuinely excellent cameras. It just can't sell enough of them, fast enough, to cover what it actually costs to run the company. Here's where it gets bad. GoPro's revenue has been in freefall for 3 straight years, over $1 billion in 2023, down to $801 million in 2024. Down. Again to $651.5 million in 2025. Hardware revenue alone collapsed from $908 million to $545 million in that same stretch, and 2026 made it all worse. In the first quarter of 2026, revenue fell another 26% year over year to just $99 million. Camera sell-through dropped 29%. Retail revenue specifically dropped 35%. Then memory chip prices spiked by 80% to 115% practically overnight. GoPro's cameras rely on that memory to shoot high-resolution video, and the company got hit with a $24.5 million non-cancelable purchase commitment tied to the shortage. The result, gross margin in Q1 2026 collapsed to 4.5%. A year earlier, it was 32.3%. That's not a company losing money slowly. That's a company whose core product barely breaks even before a single overhead cost is paid. By the end of 2025, GoPro had just $49.7 million in cash left, after losing $93.5 million that year alone. And that's when PricewaterhouseCoopers, GoPro's own auditor since 2011, attached what's called a going concern warning to its books. In plain terms, that's an accounting firm telling the public, on the record, that that it isn't confident the company will still exist in a year. GoPro's own filing spelled out what that could mean. It may be forced to significantly reduce, restructure, cease operations, or seek protection under the federal bankruptcy laws. By July, cash had shrunk even further to just $27.3 million, against roughly $87 million in debt, all of it now classified as due immediately because GoPro had breached its loan covenants.
And this wasn't even the first emergency loan. Back in August 2025, GoPro had already taken on a $50 million loan from Farallon Capital Management just to stay afloat, followed by Woodman's own family trust buying $2 million in stock that November. The $20 million from Woodman personally in July 2026 was simply the newest patch on a boat that had already been leaking for a year. Layoffs followed too. The board approved cutting about 23% of the entire global workforce on top of a 25% cut back in November 2024. This is a company that has now shrunk dramatically twice in 2 years. So GoPro did the only two things left. It hired the investment bank Houlihan Lokey to explore a sale or merger, a process the board formally announced in May 2026. And then, on July 8th, its own founder stepped in personally. Nick Woodman, the man who once had $3 billion on paper, agreed to lend the company $20 million, structured as senior secured notes, carrying 6.5% interest, plus warrants to buy more shares later. That interest doesn't even get paid in cash. It just gets added onto the debt, growing quietly until the notes come due in 2028. Because the debt is secured, Woodman also holds a stronger legal claim than ordinary shareholders if the company ever collapses. Woodman called it a bet on the brand, not a bailout. "My financing reflects my enthusiasm for GoPro and its several go-forward opportunities," he said. Whatever you call it, when a founder is personally wiring emergency cash into his own public company just to keep it solvent, that tells you exactly how serious this is. And then, right in the middle of a going concern warning, GoPro did something almost defiant. It launched its most ambitious product in years. The Mission 1 series, GoPro's attempt to move upmarket into professional-grade imaging with a 1-inch sensor and prices starting around $1,099.99. A mirrorless version with a micro Four Thirds lens mount, GoPro's first interchangeable lens camera ever, is set to ship before the end of September. Reviewers have actually called it the best GoPro camera the company has ever made. GoPro is also exploring entirely new markets, including defense and aerospace, pointing to the fact that its cameras have already flown to space, mounted on NASA's Artemis II Orion spacecraft. It's a strange kind of bet, building your best product ever while your accountants are warning shareholders you might not survive the year. But if there's a bright spot for GoPro, it's this. This isn't a company that lost its identity. It's a company whose one great idea eventually got squeezed by phones on one side and cheaper competitors on the other, while a series of expensive detours and now a punishing supply chain drained the cash it needed to fight back each time. Twice this year, NASDAQ has warned GoPro that its stock price, sitting near 70 cents, violates the minimum listing requirement. GoPro now has until mid-January 2027 to get its share price back above $1 for 10 straight trading days, or risk being delisted entirely. One option on the table is a reverse stock split, which could technically fix the price overnight, but does nothing to fix investor confidence, and can often signal exactly how much trouble a company is in. In July, Woodman said the sale process was in its later stages, with interest reportedly coming from consumer, financial, and even defense buyers. Whether that ends in a rescue, a buyout, or a bankruptcy filing is still an open question. What's not in question is this. The company that once made Nick Woodman the highest paid executive in America is now depending on him personally just to keep its doors open.